morning, everybody, guys. Welcome to this very special Pounds for Breakfast. And thank you for all of the amazing messages yesterday. I received all your messages and I'm feeling a substantial amount better today. Still a bit weak, but we have a ton to do in the markets. And seeing you guys chat, seeing you guys do amazing things in the chats gives me the energy and just the general optimism to want to push and go even further, to do even more than we've done last week in an even bigger way. So guys, thank you for all of your messages. Thank you for every single one of them. I read them. I might not have replied to everybody, but just a massive thank you. My house looked like a hospital yesterday. We had doctors, we had drips, we had the best, making sure that I could be with you here today and we could do some massive things this week. Now, we are going to be focusing on the PPI today because I do want to break down what is a producer price index leading up to what is the CPI that we're going to receive tomorrow. And what does this mean for the Federal Reserve? What does this mean for the general condition of the market and where we could see markets heading and where we could see markets going? And that's going to be our focus for the day. Now, I've pulled up your guys' chats into the live broadcast. So not only can I see your chats, but it is cemented in history. So as and when we're busy chatting, I can see that information. I can reply to you guys and get back to every single one of you. So for today, my only request is to keep the energy high, keep the questions coming, keep things moving and things pumping, and we're going to get through this on the other side way more wealthier than how we started, both time-wise, money-wise, and just in terms of experience, right? So we are going to jump into it. We are going to be having a main focus today. Like I said, we're going to be focusing on the producer price index and extremely interesting stuff, right? When I dived into it and really had a look at the data, I found something that is going to be a little bit controversial in terms of how we've learned to understand the markets thus far. And I think we're going to be in for a very big surprise coming tomorrow. All right, so we are going to jump into it. We're going to talk about the news really quickly, and then I'm going to use some of our fundamental data analysis time to really jump into that producer price index information, and we're going to unlock some pretty crazy things today. So if you're pumped and if you're excited, let me know down in the chat below. Again, as always, remember, we do have dollars for lunch this afternoon, right? We will be sending out the link. The link will go out a little bit earlier today. We're going to send the link at around about 10 o'clock. Please, guys, check your spam or your junk folders, or just have a look and just search in your emails. The same email address that you use to register in the client area is the email address that we obviously send through the link for the Dollars for Lunch show. So I get a lot of messages, people saying they haven't received the email, and then later on say that they have received it. Okay, so remember, in order to receive it, your account balance needs to be more than $100. So if you see at $99, that email will not go through. Please understand, this is an automated system thing, and it's not a one-on-one individual type basis. So if you want to be covered, make sure you get top funded. And if you don't have a Globex 360 live account, guys, I don't know what you're busy doing. This is where it's at, and we're only bringing the heat. There's so many amazing things coming towards the end of this week, as well as in the course of next week. We're about to wrap this year up so strong, positioning ourselves as the only choice, not even within Africa, but worldwide, of where you would want to be from a Forex and financial markets perspective. So stay tuned, and you can obviously say you were part of it all, you saw the evolution, and you saw the growth. So without further ado, let's go ahead and we're going to jump straight into the news. And as always, we're going to start off on a local front, just having a look at what's busy happening, and a fairly important subject that we do need to be discussing because it affects every single one of us, right? Now, again, at the moment, there is that grey listing crisis, right? Now, what does grey listing mean? Grey listing means that in terms of the credit regulators and credit rating agencies around the world, they look at different economies and they look at how investable those economies are. And they look at various metrics. They look at corruption, they look at debt, they look at GDP, they look at growth. They look at a lot of very important economic and financial fiscal policies that are put in place. And in essence, it gives a rating as to how investable a country is. Now, based on those investable ratings, it allows certain types of funds, certain types of diversification from overseas pension funds, wealth funds, to be diversified within these well-listed entities or well-listed credit-rated countries. Now, moving into a grey-listed place, right, is nowhere close to where we want to be. We know that we were teetering on junk status, and a grey listing obviously just basically sends a signal to the rest of the world that this is not where you want to have your money from an investment perspective. And you and I and every other single person knows that South Africa, as well as Africa, is one of the greatest places in the world where all the growth is happening. All the big developments are going to be happening. The whole world is looking right here. And it's just unfortunate that between treasury, between government, between our finance houses, that we cannot fully transition that value proposition into a creditable listing. So this is going to be a very important subject. It is going to have a knock-on effect for the rand, and we're obviously going to look into this and dive in this a little bit deeper. And I would like to build a special show, a special broadcast just based on this, and how do credit rating agencies look at countries, how do they get downgraded, upgraded, and what does that mean for the general outlook of certain economies. So we will be paying a little bit more attention to this, but I do think it's important that every one of us know what is busy happening and what this is all about. Now, moving into some of the US news, one of the most important things that we're obviously going to be looking at today is obviously having a look at some of this inflation report data. Right now, when we talk about inflationary data, we're talking about things like the CPI and PPI. Now, it's consumer price index by far is the most heavily weighted item there. So when we talk about the producer price index, we're essentially in simple terms talking about is it costing producers more to produce the same goods? Now, when it costs them more, this is where we talk about inflation. Inflation in very broad terms, or in watered down terms, means that things cost more for the same amount of money previously spent, meaning the dollar has less and less purchasing power, the rand has less and less purchasing power. Inflation in any one particular country just means that that same dollar today will buy less tomorrow. And an example for those of us who are obviously in South Africa and around Africa, we remember the situation that Zimbabwe went through, right? And that was obviously hyper and super inflation, where hundreds of dollars tomorrow couldn't buy something, and it became 1,000, then became 1,000,000, then became, you guys saw that situation where eventually paper money was just lying in trash piles, right? That is hyper and super inflation, and that's where nobody wants to go. So even small signs of inflation, and people ask themselves, why is this such a big deal? Even the smallest sign of inflation means, and economies look at this very, very seriously to avoid having this runaway, right? Things like printing money to solve debts, to bail out banks, to bail out Wall Street, to bail out all of these too big to fail entities. When you're just printing and injecting money into a system, and this goes into quantitative easing, which is a whole separate topic, but printing money and just injecting money into a system just means that it will buy less and less over time, causing inflation. So when we look at inflation and we talk about inflationary numbers or figures that essentially give us some key data, we're talking a lot about the producer's price index as well as the consumer price index. So again, we're going to be receiving the producer's price index today, and the producer's price index doesn't have as big of an effect on the markets, right? It has a ripple effect, because if it costs more to produce the same thing, down the line, that cost is generally handed over to the consumer. The consumer generally always pays for that cost, whether it's immediate or within a ripple effect. But having a look at the producer's price index and understanding the Federal Reserve's aim, or the government's aim, in reducing inflation, we're seeing the opposite effect happen on the markets. I'm going to show you this very quickly, and it's very interesting stuff. But essentially what you need to know is that today we're getting that producer's price index data, right? That number is going to come in today. And for tomorrow, we're getting the CPI number. Now, the CPI number has as much of an effect in the market as potentially what we could see in terms of NFP, non-farm payrolls. So again, if you're with us, part of NFP, we absolutely smashed it. Big data, big fundamental data. But remember, we at that pivot point of an economy. Now, again, we've always said this, and I've said this over the past couple of weeks, being with absolute certainty and conviction, is that if you've thought about being in the markets and you've waited and you've wondered and you've sort of dabbled around, there's never been a better time, because there is times like this that only come every 5, 10, 15 years, where complete economies start to swing, where we see complete markets move from bullish to bearish market structures. And I believe we're in that exact phase right now. Now, again, my job is not to predict the markets. My job is not to tell you what to do, but instead I'm supposed to be looking at the data and looking at what has happened to try and help understand and better prepare not only myself, but to equip you with the tools and skills over what might happen so that you can make your own decision and capitalize on those moves. That's what we're here to do. Okay, so when it comes to the PPI data, some very interesting things. And I'm going to be sharing this link in the description after the fact, and I'll pop it into the group. But essentially, this is a government released statistics, right? The Bureau of Labor Statistics. And in essence, this is released as we get the data. They also publish this report, and it breaks down in a lot further detail what is included in the PPI, right? And it breaks it down into food, energies, in terms of core PPI versus normal PPI. We obviously understand that core excludes some of those volatile items like energy. And so it brings it down into those individual items. An example, for last month's data, we got a negative 0.01%, so a decrease. Now you would assume, and based on this, we would then look at this and say, okay, based on that data release, right, last month, we got a 0.1, and that should have been good for indices, right? When I say good for indices, what do I mean? Well, when we see that these numbers come down, this should be bad for the US dollar, right? And again, good for indices. When the dollar falls, we see indices rise because stock markets perform well. And when the dollar rallies, we see that the stock markets fall. We obviously capitalized on this based on NFP. For those of you who are trading this with us, we got a really good jobs data statistics for NFP. And again, that was the trigger for us to sell indices because we know that there's an inverse correlation. So when we get in normal times, moving away from where we are now, in just normal times, when we get good CPI data, good PPI data, this is good for the dollar, and it generally means the stock markets take a little bit of a hit. However, what we've currently seen, and I want you to study this and see this and understand this for what it is, on the PPI data, what we got is on the 11th of August, okay, we got negative PPI data, meaning in summary, we should have seen a weaker dollar and a stronger stock market. Then on the 14th of September, we got a negative 0.1, so a weaker PPI. Again, we should have seen a weaker dollar and a stronger stock market. Today, right, we have an expectation for some growth. But however, before we get there, I just want to show you what the charts say, right? Now have a look at this, and this is what is very, very interesting to me this morning, right? And if we have a look at the data, I just want to go one back here, and I'm going to go to the 14th of July. The 14th of July, we got a full percent growth on the producers price index. Again, in theory, this should mean in this particular side of the fence, we would expect here to see a stronger dollar, and we would expect to see a weaker indices and stock markets. But have a look at what happened. Again, remember, this is the 14th of July. 14th of July, we get that PPI number stronger than expected. However, the stock market uses that as a bouncing point for a rally. Okay, very, very important. Moving on to the next PPI release, right? We get a decrease in PPI data, right? The next release came in on the 11th of August. We get a decrease on the PPI data, meaning we should have seen a weaker dollar and a rallying stock market. We didn't see that. We see a weaker stock market over that next trading day, a negative, right? And then if we move over into the latest one, which was last month's data, we can then see that we essentially got on the 14th of September, again, a negative 0.1%, and still the stock market did not benefit from that. Now, again, these are all signs, these negative 0.1, negative 0.2 is in line with what the markets are looking for. Remember, the Federal Reserve says they need to get the economy to shrink. They need to get that rampant inflation to go down. And this will mean a less aggressive approach from a interest rate perspective. Now we're getting those negative numbers. We're getting that growth, or we're getting that decline on inflation, and yet the effect on the market is the opposite. So we're in a very, very unique time. If we go back in the past, and again, if you haven't watched the previous, I think it was about 2 weeks ago, we had that recessionary study of all the past recessions and what the increase, what the effect, cause and effect was from an interest rate perspective. You can see that we've been in normality over that whole period of time. But now in this current season, we're seeing things move in the opposite way. And that is why I think we're in for a massive, massive time. Now, Again, the PPI is showing one side of things. The CPI is going to be showing a whole other side of things. Now remember, PPI is not as important in terms of the markets as the CPI. The markets generally look at the consumer price index, and that is the big one that the rest of the world looks at. Now remember, if CPI increases, so we get a bigger than expected number, on the economic calendar it looks green. But just remember, that is exactly the opposite of what the Federal Reserve is aiming to achieve with their monetary policies and what they're trying to roll out. So again, I will be covering the CPI tomorrow. We'll break that down. I'm going to go into the history of the CPI. Tomorrow's CPI number, I think, is going to be one of the biggest releases for this week. And again, will potentially set the tone for next week. And depending how big or how small that number is, we could potentially see another NFP type day, right? Again, if we see a bigger than expected CPI number for tomorrow, that is going to signal chaos in the markets, and the Federal Reserve in the next Fed meeting, that's going to be the first week of November, is going to come out swinging. And I've said this before, all the data that's coming out in terms of the markets are exactly the opposite of what the Federal Reserve is trying to achieve, meaning they're going to have to bring out the big guns, right? So this is something pretty important, and we're going to have to pay quite a bit of attention to this. This is obviously going to be fairly big. Okay, let's quickly have a look here at the comments, just having a look and reading everybody that is in here with us. I can see, scrolling a little bit further up, I can see Richard, I can see Fabian, I can see Gilbert, Taylor, Meditation, Melissa, Heavenly Defend, Godwin, Mark, Cooper, Timothy, Ray, Monet, Fabian, as always, Nsumi, Baloy, Wafik, Keegan, Mackenzie, Chippo, Kudzai. So guys, you are absolutely amazing. Kanya, I can see Kutluwao, I can see Labahang, I can see Lamama, I can see Monet, Tamika, Sherman, welcome, Lotbuma, and Tyler Pearson, EduFX Academy. Welcome guys, and welcome to our live broadcast. Brandon Nell is in the house with some flaming hearts. There we go. Beautiful. So just remember, this is going to be a big one, and we need to pay quite a bit of attention to this. Now, we have moved into the 9 o'clock mark, and I'm going to jump back into analysis directly afterwards, and we're going to do a quick analysis in terms of what is happening in the world. But I want to quickly just have a look at what opportunities lie for us and await for us from a trading perspective. So what we're going to be looking at this morning is we are going to be popping in, and we're diving in a little bit closer into US30, and we're going to be having a look at, is there any opportunities for us to take advantage and capitalize on this morning. All right, so now quickly having a look at it and just bringing up our RSI this morning just to see, do we have some opportunities making themselves available from a price action and break formation. The only opportunity that I'm seeing here from an RSI perspective is the fact that we might have broken this bull structure, and that might correlate with what we're seeing from a price action perspective. So what I'm looking for right now on US30 is I'm looking to see, you know, do we break this current resistance level? And if we don't, we might then very well be moving into a short position. So just based on that current move, we've got that push down. That push down isn't into another support. We are getting that push down that has essentially broken a little bit of market structure. Let's quickly have a look here on a zoomed out version. Let's quickly give this a little bit of a consideration. And again, that's why perspective is super important, right? There is nothing wrong with scalping on a smaller time frame. There's nothing wrong at all scalping 1 minute, 5 minutes, anything like that. But you do want to take consideration of any bigger market structures at play. And generally what I do is I start to look at the market structures immediately at hand, and then I start to break it down and have a look at what is happening a little bit further in the market. Okay, let's quickly have a look here. Right, so there's obviously part of our so currently at this point in time, right, based on the previous data we got from the PPI, right, let's quickly have a look at what NAS is up to this morning really quickly. Just want to have a look here. We got that little, there we go, it's updating. Okay, so we can see NAS is back into its little bit of a bull structure here as well. It seems like everything is currently sitting in a little bit of a bull structure. And again, this might move into a perfect storm situation as we get closer and closer to that CPI data, right? So this is going to be the key structure to watch out for this morning. I would suspect that German 30 is probably following suit. Not as clear of a bull market, but certainly some sort of bull optimism here. Currently sitting on German 30. Let's just have a look if we're too close. Yeah, I would say we pretty much are going to then have to focus this morning on having a look at this particular structure. Now, I'm drawing everything out on a 5 minute or 15 minute. And essentially what we want to watch out for this morning is we're just looking at a breakout of structure, right? And I think that will set the tone leading up into what we end up going to see, what we're going to end up seeing potentially this afternoon from a PPI perspective. Now, again, as I've said, I don't expect the PPI to move the market. I only expect the PPI to be an early indication of what could come from a market perspective. So what I would do here from a trading perspective is this would be my trade setup for this morning, and how I'll deal with markets for today is in these ways. Okay, so we are getting some good price action we can potentially read off of. And what I would potentially be looking at this morning is I'm merely just looking at this structure over here. There we go. Okay. So now again, I know traders are going to ask me and they're going to say, but Dane, you know, why did we exclude this section of the market? We excluded this section of the market for two reasons. First reason being the fact that we have an extension through market price. This extension is not the true high. The extension or the true high is sitting at that first point over there. So oftentimes traders will pull that level and miss everything. They'll miss all the data, right? Again, when we talk about price action market structure, we're including as much with excluding as little, right? So that would be the true, I would say, market resistance that we need to potentially look out for this morning. And for me, what I'm essentially looking out for is I'm looking for a breakout on US 30, both north side or south side. I don't have any qualms over which way. And the same thing would be on NASDAQ. So NASDAQ, we have again a great diagonal resistance level. And essentially all I'm looking for is I'm looking out for, do we get a break south side? Do we see NASDAQ break that 10,824 mark? If it does, I'll get into a sell. And if we break resistance, both this diagonal rising structure as well as the diagonal left to right, in terms of the bigger resistance, probably clearest seen on I would say probably about a 15 minute, then I would start to get into a long. For me, that NASDAQ price on a long above resistance 2 would be the 10,000, let's see, $10,981 for a particular share of NASDAQ. So at this morning, start of the morning, we're not seeing anything too hectic on a 1 minute time frame. We did get that little rejection in line with our RSI, that quick break that we're seeing happen right there. RSI gave us an early indication of that potential sell, but again, this might not be a long-term sell. We want to obviously be cognizant of the fact that we do have a pretty big support below us. If we were just trading a 1 minute time frame, that might have been enough to jump into a sell, but you just need to understand and be aware of the fact we have a major support level below us. So for me on US 30, I would say my key zone to start looking for short side opportunities, I would really say is going to be in that zone right there. So any break below that current level, and I just want to have a look at a bit more data. Beautiful. Okay, so that coincides perfectly with where we've seen things from a past data perspective. So anything below that level, is where I'd start to look out for that short opportunity leading in. And this is currently looking at US 30. NASDAQ, again, as I said, break below that level. And then German 30, again, same type of story. Now, we might very well see markets move there, right? And we will see if we're still live at that point, at that time. And if by quarter past we get that break, we'll obviously move into that trading opportunity to look for that particular short. So what I'll do on my side is I'm going to just set some alarms as we just cover some FX analysis, as we lead into what could potentially come out of this afternoon from a PPI perspective. But again, I'm not too worried about this afternoon's data. PPI is more of an insight as to what we could see long term. I'm more interested in where we could potentially look at in terms of the CPI. The CPI is going to be the one that the Fed Reserve uses Producer price indexes, what you must understand about the producer price index is they have some fats to absorb some cost, right? So if costs variation between, 0.5%, there's generally in most cases, producers can absorb that into their profit margins. But when we talk about CPI, consumer price index, that is a cost that is passed directly to the end consumer and a more direct correlation or indication of how things are going from an inflationary perspective. So tomorrow is going to be that massive one. If you don't have a live account, you are going to miss that session. If you don't have a live account, you are going to miss this afternoon session. So please, I know every time we start a show, I get hundreds of messages saying, you're going to get your account sorted tomorrow. Please, can you have the link? Unfortunately, guys, this is the new policy. It's a free service. It's a free value add for those of you who are Globex 360 live account holders. And it's only fair that as a live account holder, we give you that premium service and that premium opportunity. And it's not a free for all. Okay, so that's where we're going to be focusing. But I think this morning, let's quickly have a look as we move from live trading and we jump into some FX analysis as we have a look at where the dollar currently is, and again, where we could potentially see this going from a some data perspective. So we can currently see that the dollar is meandering, right? We are starting to get that scallop formation. We're starting to see that dollar weaken out to the top side. Now, again, this is quite a dangerous formation when coming up and due to some of these big fundamental data events, right? Again, if we see that super strong CPI data tomorrow, dollar could punch to the roof and we could see indices fall, because the indices market, stock markets, the markets as a whole, I'm pretty worried about what the Fed's going to do if it's a good big CPI data release. When I say good, remember, as we've spoken about in last shows, good doesn't always mean good. Good can sometimes mean bad. In this particular case, a better than expected reading is a bad thing for the markets. So where the dollar is, we obviously want to pay close attention to. Anything above this $113 index range is obviously going to be quite troublesome for the dollar. Now, looking at the Euro USD, nothing much has changed from our position yesterday. Euro USD obviously looking very, very weak towards the downside, and that's purely and mostly driven just by the stronger dollar. Now, again, should we see a very strong CPI release tomorrow, strong dollar means Euro USD is going to fall. But again, we could see a weak CPI data release, and that is exactly what we'd be looking for any dollar quotes, FX currencies, as well as commodities, as well as the stock market as a whole. So in the perfect world, right, where we could see the most opportunity, I believe, is should we get a weak CPI number tomorrow, meaning in line with what the Federal Reserve is aiming for with some of their monetary policies. For me, that would be a perfect storm situation. Why? Because it would signal to the markets that yes, the Federal Reserve's policies are working, right? The dollar will come off of these major highs. We'll start to see commodities rising, going back into normality. That would be gold, that would be Brent. We would then obviously also see Wall Street start to rally based on the expectation that the Federal Reserve will either start taking a less hawkish approach and a more dovish approach, that we could only see a 50 basis points hike, or anything less than 75 basis points, honestly, a win. And that would be a perfect storm situation. That would signal the shift of this bear market into a bull market, and that the Federal Reserve isn't just riding blind, staring out the rearview mirror. So that is obviously a best case or best world scenario that we obviously want to make sure that we are obviously a part of. In terms of USD, again, a very similar story. If we obviously got that very, very strong dollar tomorrow, right, should the CPI show that there is still rampant inflation, again, I think that is enough of a catalyst to send us to an all-time high, and we should be able to breach the $18.47 mark to 1 South African rand. Now, indices I've already covered, and so we're going to move on into commodities as we just quickly have a look at what is currently the situation sitting on gold. And as we can see on gold, going just back onto a daily time frame, we had that period in time where we temporarily broke through that massive multi-low that we've seen over the past 2 years, right? So we had a brief period of dollar weakness where that allowed commodities to basically get up above the 61.8, which is essentially the $1,691 for an ounce of gold. We're now below that level, right? So we are in a bit of a precarious situation, right? I believed we were in a bear trap. this might have been a slight bull trap. And this is essentially, when it comes to the market maker strategy, right, this is exactly how liquidity is created in a market, right? There's a bunch of orders to buy, there's a bunch of orders to sell. The market would go and close down all those buy orders by moving one level lower. It would go then above and close out all those sell orders by moving one level higher, essentially creating liquidity in the markets, creating that next seasonal leg to obviously move further into the trajectory that the markets ultimately want to go. Now remember, our job as traders not to move markets, right? We don't move markets. Even with $1 million account, even with a $10 million account, all your money in one position does not move the markets. The markets, in terms of the big institutional players that move billions, monetary policy, that's what moves the markets. We're only aiming to move with the markets and understand where they're moving, predict as best we can with the highest likelihood where they're moving to obviously capitalize and move with them in those same trajectories and same directions. That's the goal. So in terms of gold, everything is going to come down to that CPI data tomorrow, and I believe everything will still come down to Brent, would still be also based on the CPI data. Now remember, we do currently have that OPEC meeting that basically is cutting down, I believe it's around about 2 million barrels a day. And again, this is another catalyst from an energy crisis perspective that could send the price of Brent, the price of crude, the price of WTI through the roof. Now, we have completed that retracement. For those of you who caught the Brent buy that we essentially signaled, I think it was about 2 weeks ago, we signaled out that Brent would be a good buy at about $83 a barrel. Brent hits an all-time high, or a high for this particular session and season at $97. But I did explain we could do that pullback down to that $92, $93. Now, why is that? Very, very simple. Just pure price action, right? If we understand and look at the price of Brent, we know that, and again, I believe that was a bear trap towards the downside. We've pushed that bear trap, we've recovered, we're doing the retest. Remember, the retest, the breakout and the retest is a natural part of market structure. So when you see Brent pulling back, people get scared, people call me, message me and say, hey, I'm in a Brent buy, what do I do? A retest is part of market structure. Remember, nothing can continue going up forever. That is why we are in a recession, right? When markets grow exponentially and too fast, they need to recover. They need to correct. They need to come back to normality. That's exactly what Brent is currently doing. Brent has moved $81 to $97 a barrel. Guys, we're talking a massive percentage increase on the price of Brent. A correction in that price to normality is needed and is expected on Brent. So in terms of its future, I would still be much more optimistic for a Brent long than anything else at this particular point in time. Now, quickly, as we start to wrap up, let's quickly give a quick look into the crypto side of things and just give a look at to where we're obviously currently seeing our Bitcoin setup. And our Bitcoin setup is still looking extremely meager. We have not had much movement. Again, Bitcoin is pretty much sitting. It's almost like a double dead cat bounce here. We really just honestly on Bitcoin have lost a lot of momentum, lost a lot of market volume. If you have a look and just observe under a normal trading day on Bitcoin, Bitcoin had the ability in the past, in its bull market, even in its bear market, we were able to fluctuate anywhere from $6,000 or $7,000 a coin, right, in terms of fluctuation. And we're starting to see days where we move $1,000, $500, $600. So Bitcoin is really looking in a depressed state right here. Again, we are at that major level, at 78.6. The other thing I just want to point out, when we obviously speaking about this, and as we're speaking about the price of Bitcoin, I just want to make a quick observation in terms of the past. And that is that generally when we've come down to a fib level in the past, and I'm currently looking at a weekly time frame, so for every candle you see here, you are seeing a week of data. So 4 candles is a month, 8 candles is 2 months. In most of the cases where we've come down to an 88.2 or fib level in the past, it's not abnormal for us to have hung around this level for an extended period of time, right? If we look at the 2011 skyrocket where Bitcoin went from 50 cents a coin to $30 a coin. I don't even know what that ROI is. It would be 1,000. It would be close to 6,000% rally, right? At 50 cents to 30. That pullback, right, we saw hang around for 1, 2, 3, 4, 5, 6, 7, 8. Let's just measure it really quickly. We saw that pullback hold out for 30 trading weeks, right? So it's not abnormal to see a holdout for an extended period of time. Similar thing here. And I do believe it's a waiting game, right? It's whoever has the patience to wait out and look for that next move. So Bitcoin is going to be something we're going to be focusing on in future, but we're obviously going to keep a close eye on it and obviously make sure we don't miss out on any opportunities that it could potentially yield us. But we're obviously just paying a little bit more attention as to what it could do if we start to see a little bit of a breakout. Now, really just having a look at those US 30 moves, NASDAQ not yet moving, German 30 has not yet also broken out. It does definitely look like we are at support. So I'm going to share my screen one last time real quickly as we obviously look at what we could end up seeing come out of this particular trade. All right, so we are currently looking right now at the moment at US 30 once again, and US 30 is not breaking support and it's not breaking resistance. And again, I think this is going to again come down to the fact that, you know, the Federal Reserve right now, all eyes are currently sitting on, you know, what is going to be the inflation reports and the earnings data that we're going to end up seeing, right? We do know that some of the big banks are doing some earnings data reports. We have Citi, we have JP Morgan, I believe we also have Chase. Those will be some movers. But again, I think the big numbers here and what the world is currently looking at is definitely still sitting on this CPI data that we are due and out on Thursday. So until that happens, we could very well be in for a slow day of trading. Again, the PPI could shock us. We could see some movement here, but I'm not seeing much happen from a NASDAQ, German 30, or at least from an indices perspective. USDs are sitting dead flat. Euro USD also sitting dead flat. And again, that's just a general indication of the fact that we are barely moving. Yesterday's trading session for gold, again, was fairly flat. But again, it's all going to come out to that CPI data and that release this afternoon. So again, if you have your live accounts, we will be seeing you this afternoon. If you don't have your live accounts, then I do not know where we're going to be seeing you and where you will end up being. Dow Jones Digital Diagonal broke, about to retest it. That will influence the break of the structure on the NASDAQ too. Edu FX, no, Dow Jones did not break its diagonal. Good morning, sorry I'm late. Absolutely no problem. Hodl BTC, Fabian is saying he wants to hodl. Absolutely, more than welcome. Look, there's definitely a value proposition on Bitcoin, but I do believe it's further down, right? $13,000 is my ideal currency to be purchasing, or ideal rates to be purchasing Bitcoin. So yeah, I'd like to see that a lot higher than where it currently is at this point in time. So in general, just obviously just a better understanding of the CPI as well as PPI data will do you much good. And again, I am waiting. This week for me, the big day is going to be Thursday, that CPI data release. So that will be live. That'll be an extended special edition session. Until I see you guys, then that is essentially what we are going to look at and what we're going to be paying the most attention to. So tell me guys quickly in the comments before we wrap up, what trades, what indices, what instruments are you looking out for next? And I want to include that in this afternoon session if you have your $100 account. Let's quickly see what everybody is saying. What is everybody looking at? US 30 NAS, US 30 NAS and gold. Beautiful. All right, so guys, please pay a little bit more attention to Brent. It is going to be definitely worth your while. As always, remember to live, trade, and do things the Globix 360 way. Until I see you guys all a little bit later this afternoon, we will send out those emails. Check your inbox, check your spam folders. We're going to have a pumper session for the New York Stock Exchange. Until I see you later.